It doesn't matter if you're a business owner or a family. Every family in America needs access to capital. Every business around the world needs access to capital. Who's controlling that access? It speaks directly to the banking function. Businesses need access to capital to function and be profitable. Who's the gatekeeper that's controlling the access to that capital? It speaks exactly to the very reason, why should I consider? Why should I even, go down this rabbit hole and learn about the infinite banking concept? Why should I become my own banker? Why? Because of that's just one characteristic of the infinite banking concept, is I'm controlling my own access or the access to capital.
By contract. I don't like when we discuss, or the industry discusses, cash value whole life insurance. They might not call it an investment, but they go on to talk about it and use the terminology of investing, right? We talk about a rate of return. Okay, when you say rate of return, sure, a dividend is a return of premium. I get that the word return is in there, right? But when people when people hear rate of return, they are thinking in terms of, well, the amount I get back, the amount of money I receive relative to the principle of what I invested. That's what people are thinking of when they think of rate of return. That is not what's going on in dividend paying whole life insurance.
Did I earn 6% on the dividend? Did I earn 5% on the dividend?
That terminology just screams to me, I've yet to leave the conventional financial paradigm.
Well, so what I appreciate, because that was kind of a realization for me, the anger, back fourth or fifth policy, and you're like, where are we going to get the money? And like, I don't know. And that ticked you off even more. But since then, we've continued to buy policies. We've done the things that we were going to do anyway. And actually, we've done some things that we would have never have done, my opinion. Okay. I don't know that we would have been on the third or fourth. I don't know how many times we've been to Europe, but I don't know if we would have. Never in my mind did I think that I'm going to be in Europe with my whole family. I get pushed back an awful lot for not mentioning life insurance companies. I had people.
James, what company do you use? Come on,
the best ones in North America to practice banking with, and those are the very ones I own as well. But I'm married to my wife. I'm not married to a life insurance company. Okay, and I have talked on and on and on about life insurance companies, but this idea that size matters. In Texas, everything is bigger in Texas. You can take that to the bank. These companies are not domiciled in Texas, okay? So if there was a mutual life insurance company domiciled in Texas, they would be the biggest. Okay. Let me just say that, and I love this because it's true. It emphasizes a point. If bigger was better, wouldn't Miss America be 300 pounds? What does bigger mean? Does it mean that the larger company has more surplus notes on its books so they can play games on their P&L? Does it mean they have more policies in force so there's a greater risk to them? Does it mean that they pay a larger dividend, or does it mean they publish a larger dividend scale that they never intend to pay? What does that mean? Does it mean they have more square footage in the home office? I'm asking.
Does it mean the salary enjoyed by the executives?
Oh, listen. Whoa. Yeah, no, because they're mutual. A lot of this information isn't public. You have to go to these certain states that make these companies disclose these certain things. And my question is this, does it mean that you're using a company that has 20 executive vice presidents that earn $10 million a year or $20 million a year each?
Yeah.
What does it mean? What is the philosophy that we're building upon when we practice the infinite banking concept? It is not about rate of return, right? In which all of this focuses on rate of return. If I can make that illustration jump and pop in some particular year into the future, whether I, the agent or the advisor, understand what that does into the future of that policy, is not okay with me. If you don't know what you're doing, don't do it, right? I'm not saying that you can't learn by application. You can, and that's important. OJT, trial by fire. But when you're dealing with people's money,
Yeah.
and you don't know what you're doing, stop doing it. Stop. And it's that simple. Take the opportunity to learn and do it correctly. If by construct, the cash value in a whole life policy must equal the face amount at maturity, and the only time a policy matures is when it goes to age 120, currently in 2020. All life insurance is constructed over a theoretical life expectancy of 120 years. All life insurance is priced and constructed over a 120-year theoretical life expectancy. Okay? So if the cash value must equal the face amount at age 120, I have a very simple, straightforward question for you. Please, would you want a high death benefit or a low death benefit? I rest my case. And I think I found in my experience, 15 years I've been practicing this concept. I met Nelson about 15 years ago, 15. And after being in the life insurance business 14 years and moderately successful at least,
Mm-hmm.
right? I mean, maybe not the first guy in line, but I mean, I was paying attention.
Mm-hmm.
I was not walking around brain dead. I'm paying attention, trying to do better, like everybody else. Okay. In what I've experienced, most of the time, and Nelson always said this is more caught than taught, but whenever an individual has had some less than pleasant dealings with the bankers, i.e. the third-party lenders, this idea resonates a little bit quicker.
Yeah.
And so I'm just saying there is a solution.
Right.
There is a solution.
So the idea of having access to capital where you don't have to beg and borrow is literally your money, and that alone is just the whole thought process of being able to finance your own reality and build a personal economy. Just that idea in and of itself.
Let's talk about liberating.
Man.
Did you ever get that liberating feeling from an IRA or a 401k? I'm just asking.
No, I'm putting all my money in there. I'm taking all the risk. I can't access it. If I do, you're going to penalize me. When I do access it, it's grown, and you're going to take the money that I've took all the risks off of, and you're going to take a portion of that and give me what? Nah, I don't like that program.
No.
I don't like that program.
Well, so that's very interesting. Okay, so I didn't know that about you and Katrina. And so you discovered it, you've reading, continue down the learning, the development of, it's almost like an onion being peeled.
Absolutely.
Layer by layer by layer. Did you get angry going through that process? Surely.
Absolutely. I'm just discovering different things of what I could have done if I would have known. And just discovering how so many people are ill-affected. And it's basically a situation where you don't realize until it's too late. I'm talking about if you're just the average person, you're not thinking outside the box. If you just go through the system as a construct, you wake up at the end of your years, you're at Walmart, you're trying to figure out how did this happen, or whatever the situation is, So, yeah, it was a lot of anger just looking at what was done, what is being done, how it's being done, and people that are not just thinking, we believe in the system. We believe in the system. Like, we know there's people that just believe in the system. So it's frustrating to know that, you believe in something and it's working against you.
And then your friends, not your friends, but our friends in general that believe in the system and they're all in, they almost look at you like you're suspect.
Right.
What, you mean you're not drinking the Kool-Aid like I am?
Right.
What's wrong with you? And of course that happens in any environment, even in the infinite banking world. A bunch of life insurance agents get together and they're not all drinking the Kool-Aid from IBC, they may look at each other a little bit of suspect.
You know what I think about when I think about, they are so savvy, the powers that be is. Not only that they create the system that ill affects you, but then they foster the mindset that makes it complicit for you to function in it, then they give you a lens, they give you the glasses to see it their way, and then they create the options. So you know how you might get mad at Coca-Cola and go get another product? Well, Coca-Cola on that one too.
Yeah. The opposition.
Right. So you think you're making a choice,
yeah,
and you really just feeding right into the system. That is some serious thinking.
It doesn't matter what you're doing, in my opinion. You can, if this infinite banking concept makes sense to you, you can integrate it into everything that you're doing and make everything that you're doing even better. Okay.
And James, if I can jump in right there, I think that we've covered this in a couple different ways, but it comes back to when people are comparing the insurance policy to the investment, they're doing it wrong. You're not comparing apples to apples at that point. And what that guy was doing is exactly what I'm doing now. He's still buying the silver that he wanted to buy, but guess what? He's doing it with an insurance policy now. Nothing has changed for him. And that's the same thing, that it's hard to grasp that concept that with these policies, you want to put as much money as you can comfortably put in. Now, I will say comfortably, I kind of say that with caution, because sometimes it's not comfortable. And that's Perfect. How I know. And that's how I know that I'm putting the right amount in there, because sometimes it does feel uncomfortable. Yeah. But guess what? That dude was pulling that money back out and doing exactly what he was going to do with it anyway. But guess what? He's backed up with an insurance policy now. And that's why comparing the actual policy to a specific investment, you can do it all day long, but it's not really apples to apples, because I'm going to take that money out of that policy and I'm going to buy that same investment that you're trying to prove to me is better. And I'm going to say, yeah, you know what? I reap the benefits of that investment as well. And guess where I'm going to put it back in my warehouse of wealth, in my insurance policy. And that, I think, is the hard part for people to get over, is that they can still invest in whatever it is that they're comfortable investing in, or they can leave it in their warehouse. Now, you can go back to the silver talents and the parables of, if you don't invest money and put it to work. But my thing is it's safer and does better in that policy than anywhere else. But if that investment opportunity jumps up, you've got a way to get that money out and take advantage. Now, if you lose on that investment, that's not the insurance policy's fault at that point. But if you can beat that insurance policy's returns, then do it. And that's exactly what it is designed to do. And Nelson preached that. Nelson never preached. I was at 2 of his seminars, and you had a relationship with him way more in depth than I did. But he never preached, don't take the money out and use it. I mean, this is something that the money is there. You need to put it to work, whether it's buying construction equipment or forestry equipment or investment land or cattle or whatever it is that you're into that you think that you can make a good return on. That is what that money is there for. And until you're ready to use it, it is at least doing better and providing you with advantages that no savings account or 401k is ever going to provide to you.
You've got to be able to see through all of these magical illustrations. Money in, money out, money in, money out, money in, money out. I mean, you're just wearing the staff of a life insurance company's home office out.
Yeah.
Right? You're not creating value into that policy. Mm-hmm. And now, if it's true, and it is, that capital attracts opportunity, just load up the policies on a properly structured policy with a legitimate, well-run life insurance company, and the opportunities will come. You don't have to go out and be a hard money lender in real estate and compete with the hedge funds, right? I mean, oh my gosh, how much money do you want to lose? How negative in interest rates do you want to go? Right. I'm just making a point that Nelson is right. He's right then, he's right now. And it's okay to embrace the simplicity of paying a premium, right? And I've said it before too. If you have that money, that capital, you have access to it, opportunities show up, it will enhance your ability to recognize an opportunity, because everything walking down the street is not an opportunity. right? Okay, so then if you take advantage of an opportunity and you collateralize a life insurance policy, by golly, be honest. If you value the third-party lender's money at 10, 14, and 29% credit cards, I said it, I've seen lines of credit to accredited investors at 10 and 14%. It makes me question why they would do that, right? Well, and they do it for, just like the All-American family. I got a HELOC. I'm just using it just in case, access to capital. How's that work out? Over time, it's okay, and I'm not disparaging any of it. I'm just saying, if you access your capital, if you collateralize your cash value, and you create an outstanding loan, be honest and make loan repayments. If you don't, excuse me, that's the same as valuing the third-party lender's money above yours. If you'll pay them 10 or 14%, but you're going to gripe about paying 6, 7, 8, or 5 or whatever to the life insurance company, there's something wrong with your thinking, and it needs to be adjusted. And it's so simple. And now I can't control the interest rates. I can't control the dividend scales. I can't control anything outside of my actions, right? And then my thoughts, it's like you disparage me on these, social media trolls, and you're judging me by your own character. That doesn't affect me unless I allow it, right?
Yes.
Okay. So, and then all of a sudden, you do that over and over and over, just a matter of time. Time's going to pass. You look up 2 years, 1 year, 3 years, 4 years, 5 years, and it's like, oh my gosh, look at how much cash value I have. Do I care what the market's doing? No. Do I care what the interest rates are? No. I don't care. I do not care. And that place is so liberating. And I encourage you to join us.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.